I'm Howie Lim. This is Money Hacks by the Business Times. The financial landscape is shifting beneath the feet of young investors. Traditional retirement goals are fading, replaced by a quest for short-term gains, often in volatile sectors like crypto. In an era where curiosity is moving faster than understanding, how do we truly equip the next generation for financial security? What are the core psychological and structural adjustments needed to navigate today's complex macro environment? Welcome to Money Hacks. I'm Howie Lim, and we've got expert help today from Zachary Young, founder of Atlantis Labs and CEO of CryptoKnight Academy. Zachary, thanks for your time.
Thank you. Thanks for having me here, Howie.
How has the shift towards, say, shorter-term wealth-building goals impacted the advice you give to, say, maybe students or young professionals about fundamental concepts like compounding and diversification?
Actually, this shift towards the shorter-term investing is not new. In general, we all started off being very aggressive, very short-term focused. So whatever the current Gen Zs they are facing right now, it's not unique. But what happens is that it just tends to be more accelerated at this point of time due to social media. Everyone sees there's that comparison, like, oh, this guy's having the best life, flying business class and things like that. So we see that the younger generation wants to earn more, wants to earn faster, and they start seeking things like alternative assets. And one of the things that we notice is that the younger people likes to take more risks these days. Yeah, they're very open to it. More so than, let's say, our parents' generation and all, because maybe they're in the best season, that generation.
Fewer responsibilities,
There was no wars to, kind of save up for. So that's what we noticed. But they are also more open to alternative source of incomes or side incomes. In fact, almost everyone I interview, they have a side job, a side hustle of some sort. So I think the advice we normally give them is how to really focus on one thing. Because if you want to be successful in your investment or in your income making skill, you do need to focus. But at a young age right now, there's that urgency, there's that rush, and there's that aggressive approach to things. So they will start to dabble many things. And as a result, it doesn't usually work out very well for them.
What are some other fundamentally flawed assumptions you see them come in with?
I think one of the biggest ones is that, which is very human as well, which is I want to avoid loss.
I'm not sure that's unique to the young, right?
It's
Everyone
not unique. That's why I say it's a psychological thing. Just that they're young. At this stage right now, it's more centered or more obvious these days. But avoiding loss is not unique to them. But it's just that everyone who starts off in investments, they want to avoid. But we realize that actually the way to get better at investing, whether it's in stocks, in crypto, in any form, it's actually not to avoid the losses, but to learn how to manage the losses so that the losses doesn't wipe you out. But the scary thing about things in the space of crypto, because of the volatility, it is quite easy to make some money at the start. But with that, it gives that confidence, and then they'll just pour in more money or increase their portfolio size, take a bit more reckless moves. And when they suffer the losses, it bites into their confidence. And
yeah, I wish you could see my face, because every time he said crypto and risk, and my face just grimaced. All right, let's talk about then the current macro environment. We've got high inflation, interest rates, geopolitical uncertainty. Is there a critical adjustment that young investors need to make to their personal finance strategy then?
I would like to quote from Nassim Taleb. He wrote The Anti-Fragile, The Black Swan. So I thought his approach to investing or portfolio allocation, it's very apt for this period of time. He always talks about black swan events where there's a negative black swan event, something happens very badly and might crash your portfolio, or something very positive will happen and maybe all your stocks shoot up on things like that. So how he positions himself, and what we teach our students at the CryptoKnight Academy as well, is to actually position yourself in both extremes. He introduced this as the barbell strategy. Instead of putting things in the middle, most portfolios, they try to create something that is very hedged against the markets. If it goes up, it doesn't go up too much. If it drops, doesn't go down too much, But that puts you in the middle of the road, which is not very good actually, because we are all still affected by the market situations. For this case, the barbell strategy, it has a very interesting approach. What it says that in case of anything happens, you put like 80, 90%. I mean, these numbers are just example, but you put like 80, 90% in cash. Why will you do that, right? Because it's very, very safe. Because to him, cash is the safest end. So one extreme, the safest end. Then yet he'll put 10% in the most volatile, most extreme stuff.
But that also can be argued because the value of your cash just continues to go down because of...
Correct. But how he counters that is that he'll put 10% in the highest risk, most volatile kind of assets, which is in this case, crypto. So in the case where there's a war, the markets crash, your cash will retain most of its value. I mean, yes, it will be eroded by inflation, but most of it is there. But in the event that this is in the negative black swan event, but in the positive black swan event, which is like Bitcoin, right? At the point of time when it went up by, it's one of the rare assets that can go up by 1,000% kind of thing, ridiculous amounts. Then that 10% you put in goes all the way up. But in the event that, let's say, Bitcoin goes to zero, right? Some people don't believe in crypto, which is fair. You only lose 10%. So this two very extreme positioning has actually helped to weather the black swan events. So he argues that more people should put things at the both extremes instead of putting in the middle, which is like stocks, which is the usuals. Because when market, like let's say like war right now, everything gets dragged down anyway. So everyone's affected. So you don't benefit, or you're not positioned in a way to take advantage of this.
Yeah, you're making the risk-averse sweat over here, man. Okay, I can imagine that people's curiosities will be piqued by something like that.
Yeah.
Controversial, if you will. But you're saying curiosity is also moving faster than understanding. What do you think then can be done to bridge this gap, really?
Yeah, I think over at CryptoKnight Academy, we are very particular on education because, there's many new asset class coming up. I mean, crypto is just one of them. There are other things as well, derivatives, all this. And all of this serves to accelerate the earnings of your stocks, your tradings, CFDs, and things like that. But what happens is jumping into all these without understanding, without the proper education, is a recipe for failure, I can tell you.
Bankruptcy.
So when they experience some form of success, which is the most dangerous because they're like, oh, this is actually quite easy. I don't need to be educated. And then they decide to increase their position size or take more risk. And then when the market turns against them, and it will, you see, it's a matter of when. So educate yourself first. Make sure you learn all the stuff. The financial markets, the asset class, there's always new things coming up. Our education must be as fast as our curiosity.
But that's difficult, I imagine, because there's FOMO that you're battling. They want to get in as quickly as they possibly can because what if I lose out on Bitcoin's surge or whatever? What other sorts of psychological things do you come up against? Of course, the fear of losing money. Yeah. Have you come up against the fear of getting started?
Fear of getting started is one thing, and also sometimes people do want to get started, but the complexity of getting started, which is why we created Atlantis Labs, which is to make it easier for people who are not used to the crypto world or the Web3 world to get started on it. Because right now, if you were to ask my parents to buy a Bitcoin, they're like, what is this? How, that kind of thing. So complexity is one thing, but there's also the greed of not making as much as my peers. Let's say I may be invested in Tesla today. I may be doing well, it's going up. But then when you see someone else in crypto or in buying Nvidia stocks, which went up a lot, right? They're like, okay, you know what? Let me try to take on more risk to try to win the guy, to beat the guy. And that's where greed comes in. So we realized that these are some of the emotions that we have to guide our students to manage. And I think the funny thing is that not only in stocks and traditional finance form, but in the world of crypto where the gains are very extreme, right? I always joke with the founders that we are only in this space where people are making money and feeling very upset about it because they will see other people making more and they will be like, I sold too soon. This kind of regret is a recipe for failure in the next trade because they will be like, okay, I'm just going to hang on to it and it goes down. This emotional management thing, it's very real in the investment space.
Still to come, how should young investors redefine financial security so it's attainable in their lifetimes? And maybe we can get some shortcuts from Zachary Young. More in a moment.
Good conversations start with the right questions. This season, those questions are about us. The people, the policies, the forces shaping all of us. Lens on Singapore with Claressa Monteiro. Back in May. Powered by the journalism of the Business Times. On YouTube and wherever you get your podcasts.
And now, back to Money Hacks from the Business Times.
Welcome back. Zachary, earlier you were talking about all of these psychological I wouldn't say obstacles that you're up against, things that you need to help educate young investors about. How are you going about doing this? Because now it almost sounds like you're going into psychiatry territory.
I would say we try to, number one, bring to awareness. Ask any trader, any investor. Investing is truly a test of the mindset as well as the emotional management. When the market is going down, you must be able to keep your cool. And when market is going up and there is nothing to invest, you must be able to just stay the course and just wait for the opportunity. So that's a lot of self-control. How we teach the younger generation of investors is we give them a system. These are the rules we set even before we enter. That helps. Of course, as the market heats up and as they start seeing their peers making more money, they'll be like, okay, you know what? Maybe I should break this rule. Maybe I shouldn't. Maybe I should break this rule. Maybe I should just jump in. It's a little bit expensive, but it's okay. It can go up higher, right? And that doesn't turn out well. Another thing where we make them do is we make them journal their trades. So even if you make a mistake, it's okay as long as you learn from it. So you need to reflect on the mistakes. Most people, once again, they just make the trade without tracking their trades and there's no chance to reflect on the mistakes.
They're probably feeling a sense of, hurry up, because things are so volatile now. You never know what's going to happen tomorrow. So this, I have 30 years to build up my nest egg is not really
Working
realistic
right now.
or attainable. It might be a 40, 50-year type runway. So let's redefine financial security that makes it attainable for them.
The definition has changed. Previously, it was creating a nest egg and then we will draw down the nest egg. So for example, let's say, if you talk to financial advisors, they'll say maybe you need like 1 million to retire, right? Obviously, that's not enough, okay? But then we'll just use that for the sake of calculation. Assuming that you retire at 60, 1 million, then I'd like to have an annual retirement income of, let's say, 30,000. The traditional form of financial security is, okay, let me get that 1 million as fast as possible. Save, make enough money, invest, hit that 1 million. When I retire, that 1 million, I'll just draw down 30K a year. That gives you about 33 years worth of retirement income, right? If you live longer than that, good luck to you.
No.
If less, then you're like, oh. But financial security, right, should be redefined as not as the amount that you make to save up, but the ability to make that amount. It's like, teaching a man how to fish. A person who has financial security is not a person who has 1 million in the bank, but the person who knows how to maximize the money in the bank. So imagine I have 1 million at 60. The person who does not know how to maximize it will just draw down. But the person who actually knows how to maximize it will take the 1 million, put it into maybe something safe, something fixed D, right? Give you a 3% annual interest.
You wish.
Yeah. So around there, or invest, right? Just get 3%, which is quite a low amount, to be honest. And 3% a year is 30,000, right? 30,000. So you get the same outcome as the previous guy, but this guy can live all the way until 100. And he will still have his 1 million.
Yeah.
So I will argue that the second guy has more financial security than the first guy, not because of the amount that they have in the bank, but the ability they have to make more money with whatever that they have. The definition should change from the amount they have to the ability they have. Yeah, I think that's the biggest difference in definition for this current generation, if you ask me, because things are so volatile and inflation is so high. So, we joke 1 million not enough, 2 million not enough. I don't know what is that final amount that's going to be enough. But if I'm in my 60s, 70s, and I still can invest and get some regular returns, I think I'm financially secure.
So changing their minds or how they think about certain things, what other mental models do you teach to counteract the pressures of today for young investors?
At the end of the day, there are some systems. Number two, we teach them education. But I think the last thing is that we also hang out in a community, because investing has taken a bit more community-based kind of thing, especially in the world of crypto, because things move so fast. So you are never able to learn everything or every coin, every token. We have started to see that people will have investment circles, even in stocks as well. Everyone have their own, what they call area of competency. So they will have this trusted circle. They find people of the same level and they tap on the expertise of each other so that together they can grow their portfolio. Yeah.
I feel like who has the time for all that? First of all, let's say I'm going to class with you and then I have to still spend some time looking at my personal finances and such. Let's say I can only commit an hour a week. Where would the highest impact come from for me to allocate the time of 1 hour a week?
Okay. Most of my personal belief in investing, right, is I try not to be so active in my investments. I try to either dollar cost average, automate it, because who has the time for it, right? Yeah. So we try to take away the burden of this investing as much as possible. But if I had 1 hour every week, I will find a strategy that is very, once you finish how to do it, it takes about maybe 15 minutes a day or so. You just check and you just execute it. You find a strategy that works for your time. Trading is it's a very exciting thing. You can get stuck in front of the computer. You get higher returns, but you also get stuck in front of the computer. It can be a full-time job, actually. With 1 hour, I'll go educate myself. I'll go find all the possible strategies, but I'll find the one that takes the least amount of effort and gives me comfortable returns, and I'll just compound it. Yeah, so it's not about the amount of time I have, but the consistency that I have. I mean, I've been in this investing space for maybe close to 13 years. Very beginning, I learned this strategy that works. But it was too slow, and so let me go find the next faster strategy. And so I went one circle. I came back, I realized that, hey, actually, I don't have that much time for everything. If I just stick to what I've learned at the very, very beginning, but I've compounded over the last 13 years, I actually get better results than playing around.
Speaking of time, we've run out. Zachary, thank you so much for sharing your insights with us today.
Thank you very much, Howie.
Zachary Young, founder of Atlantis Labs and CEO of CryptoKnight Academy. This has been Money Hacks by the Business Times. I'm Howie Lim.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.